I just had a $52,000 trade. Right now is 11:52 p.m. here in Dubai. I just closed this trade and I wanted to create this video to show you my trade, my analysis behind it, my fundamental analysis behind it, because as you can see behind me, there's a Powell who was speaking. FOMC decided to cut rates. Fed decided to cut rates. So now if you look at my screen, you can see a beautiful 1-to-8 risk to reward trade on GBP USD. Here was the trade. As you can see, I had two positions, one a little bit bigger, one a little bit smaller. If you look here, this is where I closed my first half, and this is where I closed my second half. And all the way at the bottom, I opened the position right here. So let's jump onto the chart, and I want to show you what we have going on. Here was my setup, and if I go start from the very beginning, I will always start with bias. I want to figure out which direction I want to trade. And I already created a video before this video, went pretty viral, over 50,000 views in a couple of days, which was crazy. A lot of great feedback, so really appreciate all of you. Now, same thing, just like previous video, just like this Euro GBP trade that I had here. Some of you guys said, oh, but it's not, it doesn't happen that often. I mean, let's look at the charts right now. What we have here, again, previous weekly candle closed bullish and daily market structure is bullish. There's no reason for me to sell when higher time frames are bullish, right? If you are trying to trade against a trend, you're trying to catch a falling knife or vice versa, and you will get hurt in the long run, okay? So now that everything is telling me bullish on the technical perspective, I was looking for buys. Next step for me is to figure out where I want to take those buys. So as usual, I dropped the lower time frames, and on the 15-minute time frame, I identified a candle inside of a London session that happened a couple days ago, which was my demand. You see, indecision candle followed by an impulsive move. Now in this case, it wasn't necessarily an indecision candle. When I have that situation, I'll drop the lower time frames, and lower time frames, 10-minute. I was able to identify an indecision candle right here. But since it was in a pretty same range, I just had this 15-minute candle on the chart as my demand. What I also liked about this demand was that after it was created, it was respected here, then it was respected during New York session, and then a London session is where I entered the trade. So what happened here at around this point, I needed the last step. I needed an entry confirmation. I needed the price to tell me that this level is being respected throughout the London session. The last thing I needed to do is get that entry confirmation. And as I was looking at the price movement, I saw a shift in market structure. So we have the break of market structure, break of structure to the upside, and that's basically where I entered the trade. So my entry was around this area. I'm sorry, I'm not exactly sure in like pips or whatever, but this was my entry and this was my trade. Now, when it was in London session, it was a little bit lower. When it was in London session, before the news started coming in, I was expecting big volatility. So I played it safe, and before all of these candles started moving up and down, I set my stops at break even, and I said, you know what? I'll just let it play out. If it gets me out at break even, it's okay. If not, there's a big upside to that. So as everything went forward in New York session, I was trading with my Hidden Edge members, and I exited half of my position right around this area. Right around this area at this high. And then I left the rest 50% of the position running before all of the news kicked in, and I closed the last 50% basically almost at the very top, which gave me a pretty nice risk to reward, 1-to-8. Now, this was my technical analysis. When it comes to my fundamental analysis, I want to show you an example, because one of my students asked me a really good question. Did you predict the Feds to cut the rates? And my answer was very simple. I was expecting the Fed to cut rates simply because Trump is our president. Trump bets everything on businesses. Trump bets everything on stocks. And if you want the stocks to thrive, if you want the businesses to thrive, the dollar needs to get hurt, right? Powell was always for dollar strength. Powell was always for increasing and fighting the inflation, where now he was not, I wouldn't say forced, but because Trump is president, I'm gonna say it, in a way forced to cut the rates. And I'm trading for 9 years already. I've been trading for Trump's first presidency. I'm trading Trump's second presidency. And I predicted, was this a guess? Yes, but I would say this was more of a calculated guess from my side. So now when I have my technical analysis and my fundamental analysis and predictions aligned, that's where we get. I'm not saying I get a $50,000 trade every time, but because of my experience, I now understand when I should close full of the position here, where I closed half of it, or should I close half of it and let the rest run to see what happens, and I close at the very top here. Now, the price dropped after. Do I expect to go higher? I would probably expect to go higher. We still have this zone. We still have this valid level. If the price gives me another entry confirmation from the same exact level, I will execute the same exact trade. But overall, beautiful trade, beautiful day, beautiful comeback after a losing month. And now this month I'm up, I don't know, I'll have to check, but around $50,000. Thank you for watching, guys. Hope this helped you. I'll talk to you soon.